Welcome back. Today's topic is the new way of real estate investing in a way that you have never looked at it before. So stay tuned. We can do a deep dive. So just relax and focus and watch all the way to the end, and you will not regret it. Thank you so much. This is Seewing Yi, and my co-host is Julie. How are you, Julie?
Fine, Seewing. Good morning. How are you today?
Very good. Thank you for coming on board once again today. Let's go ahead and get us started. This is truly transforming information. So, my title is Turning Back the Clock. I know some of you guys are not that old as us. We are baby boomers, but you know the movie Back to the Future
Right.
by Michael J.
I
Fox? Yeah.
I remember that was a great movie.
Yep. Same concept. But we could talk about real estate investing. So, here we go. What I'm trying to say is the future of real estate investing will never be the same. And another movie title, Reality Bites. I think that's a movie title.
It sounds like it should be one.
I know. Yeah, Google. So, with investors, you need to lower your expectation. Approximately 80% of the US have no more cash flow. Okay.
Mm.
That is the reality. But before we go any further, Julian, you and I have to continue to show this particular information.
Right.
The great legendary Mr. Warren Buffett, he said, be fearful when others are greedy and be greedy when others are fearful. This
There you
means right now we live in a fearful housing environment. So therefore, the rest of us, we need to be greedy. We need to be capitalistic, capitalize on other people's fears so you could achieve your wealth for yourself and your family. Quickly, Julie, what is your interpretation of this particular quote by Warren Buffett?
Well, I think it kind of means don't follow the crowd because I think when everybody else is buying, everybody else is buying. When everybody else is stalled, then he's saying just do the opposite. Go against the grain, to use an old saying, rather than just following the herd.
Exactly. Yep. Just we could talk about the contrarian investing. We could talk about dollar cost averaging on a future episode. So stay tuned for our future podcast. But we will talk about the strategies. But again, another information that you and I need to go over every single podcast. Rental
Mhm.
property, 4 different ways to make money. Rental property is history's most attractive, powerful, tax efficient, proven, multi-dimensional real estate investment asset class. You get cash flow, tax benefits, appreciation, and leverage using a fixed rate loan. So that's a given. All right. So,
Right.
yep. All right. Let's getting back to the deep dive into what I'm trying to talk about here. So, back to the future. And back in 2012 and 2016, more than decades ago, our network, Judy, you were not around back then.
Right.
You signed up for our free membership several years ago, but
Mhm.
you have been doing very well. I've been doing this for more than 2 decades, so I've been through the ups and downs and
Mhm.
sideways of all the wholesale market. But back a decade ago, my network was promoting new construction, single family home around $150,000, renting for $1,250
Right.
in those markets like Boise, Idaho, Phoenix, Arizona, Las Vegas, Orlando, Tampa, Raleigh, Durham, North Carolina, and
Mhm.
so forth. And those are the good old days, right? And
Right.
for those of you that are members that who took action, you guys are just doing very well. For that did not take action back a decade ago, you keep saying to yourself, you have a lot of regrets. Could have, should have, would have, whatever. So right now it's 2024. If you continue to stay in the sideline forward 2034, 10 years from now, you're gonna have the same old regrets. Anyway, now in 2024, those same rentals
Wow.
we mentioned over here have skyrocketed to about $350,000, uh, double depreciation in the past decade in many of our great cash
Right.
markets. And the rents have gone up from 1250 in 10 years, double the rent to 2200. As a result of this numerical disparity today, in many markets, we're seeing no more cash flow.
I think it's interesting about that. And I think it's important that your audience understands the 2012 number at the 150, the rents were just close to that 1% rule. But then when the property prices doubled, even though the rents doubled, it's way below that 1% rule. So because some people might think the rent doubled, so it must be a good deal, right? But then when the property doubled in price, you're not going to be able to achieve the same cash flow. So I think that's what it's important for people to understand about those numbers.
Absolutely, Julie. Today's world, today's real estate investment landscape is a whole lot of different than in the past.
Right.
But again, people have to make adjustments. People have to adapt to the reality of the current housing environment. Okay, now what? So the question is, now what? Right? I have a solution, of course, Julie. Like I mentioned at the beginning, back to the future, we can turn back the clock. What if we can bring you today's real estate investing opportunities, today's rentals, go back into the future, go back and turn around the clock back to 2012, go back 10 years. Would you not like that? Turn back the clock?
Right. That would be great.
So you can restart and give yourself a great opportunity. So the future of cash flow rental investment. Here it is. Here's the future.
Mm-hmm.
Before I begin, rest in peace, cash flow rentals, at least on the nationwide basis, at least based on the mass media, the talking heads out there, all the so-called real estate gurus out there. They keep saying no more cash flow. But you and I agree and disagree, right?
Exactly. You got to know where to look.
As an investor, do you know there are more than 2,000 counties in the U.S.? Do you know?
Wow.
There are more than 4,000 cities in the U.S. That's a lot of hidden gems out there.
Right.
And my job, since I've been doing this for several decades, and I've helped thousands of turnkey out-of-state passive long-distance investors to thrive in any market over many decades. So therefore, currently, the reality bites, okay? That means no more trophy markets. Instead, here it is, drum roll please. Instead, Julie, I'm going to surprise you as well. You have no idea, you have no clue what we can discuss, right?
Right.
Whenever I invite you to do a podcast, I purposely do not disclose.
Oh, it's great though. No, I didn't learn it for the first time with your audience. So that's great.
Absolutely. No more trophy markets. Instead, here we go. Buy low cost, quote, affordable housing, end quote, in rural areas that are going through some gentrification. There's a slow path of growth in those communities. It's emerging. It's even further away from the major metros. Instead of 20 to 50 miles away from the major metros, it's like maybe 75 miles or even 100 miles away in a deep submarkets. And then we track the migration detours. More and more people are leaving the higher cost market. Even in the major metros of Texas and Florida, housing prices have skyrocketed in the past few years. And the cost of housing is getting to be expensive. So we are seeing a migration detour into submarkets, which is right here. They are right. So a lot of locals, a lot of people, they're trying to find affordable living conditions, and they are located in Oklahoma, Arkansas, Alabama, Indiana, and deep in the heart of Texas. Still opportunities, just to name a few. Okay. Mm-hmm. So that's what I've been doing all these years, and nothing has changed.
Right.
We are always ahead of the curve. You know that, Julie. You've been part of my network for several years.
Definitely.
You got to look at the forefront of risk investing. You have to get ahead of the curve, find new markets to show the economic engine, population growth, job growth, migration, home, and most important is find affordable housing, because especially for risk investors like you and I, we need to cash flow on 25% down payment, on 20 to 25% down payment.
Right.
And the best way to cash flow is to go into affordable housing, rural markets. All right.
Right.
And go ahead. Any quick comment, Julie?
No, I think the important thing I think for your audience to understand is unless they're really familiar with those markets, they're going to need some guidance, which is a strong reason why you should have a trustworthy mentor to help you walk through these. That would be the only thing I would think of, because when I first started doing this, when my husband and I first started doing this, we had no idea. We didn't even realize there were 49 other states because we only live in California. And we think that the whole world revolves around California, but we know it doesn't. So yeah, without the guidance that you provided us in the beginning, we wouldn't have known anything about upstate New York, Buffalo, Niagara Falls areas. Yes,
Yeah.
we own 6 properties now, but we'd probably still be looking for our first property had we not had an opportunity to work with you.
Thank you so much for your kind words, Julie. And you're right. Not only people from California, people from other high coast areas, such as the Pacific Northwest or Chicago area or the Northeast area, New York City and in Boston, and those high price in New Jersey, high price markets. It's very, very hard to cash flow in those markets. So you will have to go out of state, you will have to other things. And by me, my organization, we've been around to help you do all that, do all the legwork, so you guys don't have to do all the research and do
Exactly.
and legwork. Yep, that's the value we provide all these years and continue.
Right.
With that in mind, Julie, the new benchmark, numerically speaking, like I said, we can bring it back 10 years prior. And today, you're lucky, you're very lucky to be part of our network, to become a free member of our network and have access to this type of unique opportunities. So
Absolutely.
currently, we are doing this. We're buying new constructions, single family home today, right now, average around $150,000 in those markets.
Right.
And duplex around $320K, brand new, and brand new fourplex around the low 500Ks. They are these markets, these type of locations, you can expect future cash flow and appreciation markets. Okay, that's the key. Furthermore, how we do it, again, this is the blueprint. How my team, myself and my team, we tap into the nation's most underserved rural communities. We partner with we go into a particular community, a particular city, a particular region, okay, and we partner with that community's local business and civic leaders, developers, our network of high reputable builders. We consult with the school boards. We work with the local military bases at some of the locations that we work with. So we work as a team, okay? And as a result, by brainstorming with our local communities, we identify the housing needs of said community and meet those needs. So most rural communities have shortage of rental homes and new construction. Affordable housing is severely lacking in most rural communities. Look, Julie, you and I have been living in California for most of our lives. We always hear the word affordable housing in California. Guess what?
Right.
In California, affordable housing does not work.
It doesn't exist.
Quickly, why affordable housing? Real quick, and we can talk all day about this political topic, very heated discussion. In your quick comment, you live in Southern California. So why in California, affordable housing simply does not work ever before and nothing can change?
For us, most communities out here, if you don't have $1 million, you're not getting in. So in terms of even just living as a resident, it's very hard. But now you're trying to talk about becoming an investor in a market. Well, even say the average price is $800,000. It's just not going to cash flow. It's not going to pay out unless you're putting down a huge down payment. And then that's only one property. I think it is important to understand, like we had to learn, there are other places out there that you can invest. You don't have to leave the comfort of your own home. Like I tell people all the time, I've never actually been to New York. My husband has, but I've never been to New York. But we were able to take advantage of some properties in the upstate New York area that we wouldn't have known about had we not met you.
Julie, yeah. Okay, my final comment on affordable housing in California does not work because there's a lack of land. Also, the cost of construction is very high. It's too costly. Absolutely. And the county, the local government in California or because of politics, they can't
Right.
do it. It's just, but in other part of the country, affordable housing, it does work. And I'm grateful for you, opposed to everybody out there. Let's continue. By the way, myself and Richard Advani, we are the visionaries. Richard Advani, as we speak, he's doing a lot of communication with the various local communities in those markets to create build to rent models. We were able to team up with builders and developers to build brand new homes in those markets, in those rural markets, to take advantage of this amazing shortage of rental homes and other kind of homes. But they are all off markets. The listings we have are not listed in a multiple listing service. They are only available within our network members. You can Google search all you want, but you're not going to find any of these listings except when you're part of our free membership within our organization. But having said that, this is the tip of the iceberg. What I'm about to talk about, it is the tip of the real estate iceberg. What I mean by that, we are introducing to you as these are the quote, new way, end quote, of real estate portfolio acquisition for 2024 and beyond.
Right.
So we're not going to go over this pro forma, but I'm giving you a sample of the real estate new construction in these up and coming rural communities that have a lot of long-term future potential for real estate investors and the people in local communities to benefit from renting and ultimately to buying their own homes in the future. One sample, look at new construction. Who ever heard of an entry-level new construction home, single-family home for $150,000? That is unheard of, right?
Nice. Yeah, that's nice.
Yeah, it's unheard of. And it rents for like $1,300. And I'm not going to go over the numbers, but you can go over the rent-to-value ratio is almost 1% rule. Who said 1% rule does not exist anymore these days?
Right.
It does exist as long as you come to be part of our network, right?
Exactly. Got to know where to look.
I'm not going to go over the other metrics. That capitalization rate is 8.1%. That is mind-boggling, way above the benchmark of numerical metrics, right?
That's a great property. I'm just kind of glancing over the numbers quickly. That's a really great property. And
Well,
there's construction, no less.
absolutely. Even with 20% down payment, right? Financing, even at 7% interest rate or slightly less, you can still cash flow, right? A couple $100 from all other aspects. Only $33,000 down payment and closing costs, right?
That's a good deal.
And the builder gonna give you some seller's credit. Okay, they'll give you, therefore your closing cost is very minimal. And plus they can give you the first year property management free.
Oh, wow.
So you
That's
can,
a good deal. That's a good deal.
they'll incentivize these houses for investors like yourself out there so you can achieve better cash flow from day one. And the rental market is very strong. In this particular case in Lawton, Oklahoma, is next to the U.S. Army base, Fort Sill.
Okay.
Yeah. So in case, Julie, I know my background, but a lot of people watching, they don't know my background, but I spent 20 years U.S. Army active duty retire. So I understand having properties close to a military installation will create amazing stability in terms of the rental market because active duty soldiers have extra tax-free allowance to pay you this rent. Okay. So yeah.
That's great. That's really important to know. Again, without being part of this network, you wouldn't really understand that. And I think your clients or your audience needs to understand how powerful that is. You're constantly going to have a constant stream of renters, high quality renters, military renters. It doesn't come much more high quality than that. So that is really an advantage rather than just looking at it as a standalone property, understand where it is. And I'm glad you brought that up because I think when you were mentioning earlier that these properties are maybe 75 to 100 miles outside of the mainstream cities, but people still have to live there. And so this is, even though it might not be the heart of Oklahoma or whatever, it's in a great location to have a great quality tenant and a consistent tenant.
That's right. Yeah. Because of my ex-military, because I'm a veteran, this kind of military installation, U.S. Army Fort Sill, they could be around for a long time because they have a very critical mission.
Right.
U.S. military. So we not only talk about military renters.
Right.
Military renters only consist of 30% of the renters, and the other renters are teachers, school teachers, and other blue collar, high quality renters that need a place to rent because there's a shortage of homes to rent in this particular market. And of course, we have brand new duplex in the same area. And brand new duplex for only 315,000. This is mind boggling. And both doors rent for a total of $2,600, $1,300 per door. 25% down payment, minimum down payment to get a multi-unit. That's a Fannie Mae requirements. Given all different scenario, you still have a monthly net cash flow of $371 from day one. And of course, we don't need to talk about the multi-dimension aspect of it. You're getting tax benefits, you can appreciation potential. We only factor in 2 or 3% to be conservative with respect to appreciation in the future. And so anyway, all the numbers looks good. Okay, this is such a value duplex. So the numbers are really good and very good investment. Of course, something you and I talk about in South Texas. We've been promoting South Texas. Again, you're not going to find a brand new fourplex.
Right.
One of the fastest growing areas in South Texas, which is you can get it for $545,000 for 4 doors and great location, brand new, excellent rent to value ratio, 1% rent to value ratio, easy to rent because of the fast growth of the South Texas market. Again, this is so I'm just giving you a great sample. You can go over the numbers yourself for those people who are watching. You can pause this slide as well to digest the amazing numbers, all the great numerical ratios and all the cash flow appreciation, tax benefit, and a loan pay down by the tenant. So anyway, so this is, and people need to understand the first year cash flow is potentially slow, but again, you and I, Julie, we've been trying to educate our investors that you have to look at the big picture. You have to look at the next 5 to 10 years, how you use a proper calculation, proper software, whatever. You can see that the rent systematically will go up based on inflation. You can raise your rent on a consistent basis year over year, hopefully. And then therefore, then you have a great 30-year fixed rate mortgage over time. Your rent is going to pay down your mortgage. So your cash flow will consistently get higher and higher down the road. The first 2 years, you may not see that much tangible benefits, but you have to stick it out for the long term. And when the value of your home increase, whatever appreciation, sometimes does not appreciate. Real estate does not always go up, but if you invest long term over a 10-year cycle, on a historical basis, your value of your property will go up. Yeah, the more your value of your home goes up and the loan balance gets paid down by your tenant, you can outsource the payment of your debt to a tenant. The tenant can make you rich. So over time, increasing value, loan balance gets lower. So you have more equity, you have more LTV loan to value. You can potentially cash out refinance to buy more properties, tax-free loan, cash out refinance. So any thoughts on this? Looking at the 5 to 10 year projection is more important than just the first year, potentially relatively low cash flow. What are your thoughts on that too?
I was just looking at the statistics and the numbers on there. And I think the important thing for people to understand is this is a long-term, you have to have a long-term mindset when you go into an investment property like the ones you're speaking about. Somebody asked me the other day, oh, do you still have all your properties? Of course, like we would never get rid of them. Why would we get rid of them when it's something that is producing a cash flow now? The potential for it producing a much larger cash flow 5 years down the road, 10 years down the road is very high. And then that's going to afford us retirement that we don't have to worry about where the money's coming from. So yeah, of course we're going to keep our properties, but people really have to understand it is a long-term mindset. If you look at the first 3 years, you're going to be like disappointed. Or if you think you're going to fix and flip, you're going to be disappointed because that's not a strategy that you're talking about. But over time, yeah, you can't lose with this type of strategy.
That's right. Exactly. Yep. That's right. You have to delay gratification. You have to, it's not a get rich quick scheme. You have to show discipline, a lot of resilience. Do not give up attitude. Do not panic. Work out the solutions. Vacancy will happen. Maintenance will happen. And you can run into issues. But however, if you surround yourself with a great team like we do, right? Then they will do all the dirty work for you. So you don't have to, you're 2,000 miles away, whatever. We have great teams that we vetted all these years. We have property managers that have a great track record. They do everything for you. And we have a local realtors and loan agents and appraisers and inspectors. All those team in the financial team, all working as a team to help you long-term success. And what more can you ask for, right?
It's interesting when you think about doing some type of long-term investing with that screen that you just showed. It does take all those people to make it happen. But can you imagine trying to do that on your own in another state where you're not unfamiliar? You don't know a good real estate agent from a bad real estate agent. You have to find a lender. You got to find just the basics, an appraiser, an inspector, just the basics to go through the process. And then how do you know that they're trustworthy? And so again, I think the advantage of working with a solid team, a trustworthy team, is that all that work has been done ahead of you. And all you have to do is, if you want this inspector or that inspector, this lender or that lender, you've already done the work for us. So we just pick and choose from the best of the best.
Yep. Meanwhile, and at the end of the day, that pretty much culminate into what's the next. This particular slide will show you. Julie, you have 6 rental properties in upstate New York, Buffalo, Niagara Falls. 6 rental properties, all purchased with your own money, you and your husband's money, and everything else. Not only you, but hundreds of our investors for all those years, over the years, whether they own 6 rental or 10 rental or 20 rentals out of state. At the end of the day, why don't you go ahead and mention this? Why?
Yes.
Why this comment is possible?
It's very possible. It's extremely possible because once I receive my documents on my rental receipts, I have a program I put it into, Property Tracker. You taught me about that. It costs a little over $300 a year to have the system, and it's invaluable. I plug the numbers in. The computer does all the work. At the end of the year, I have my numbers from my accountant to go over and do my taxes, but it literally takes me way less than 2 hours. And every once in a while, you get some paperwork in you got to handle, but that's it. It's like 1 hour for me to go through the 6 properties, plug the numbers in. I don't worry about it for another 30 days.
Yep. To further your point, in the end, like I said a moment ago, doesn't matter how many out of state long distance rental you are using our investment model methodology. All you need is 1 or 2 hours per month, not per day, not per week, but per month to manage your vast real estate portfolio.
Absolutely.
And this is doable. People say the mainstream media, the fake real estate gurus and everybody else, they said, oh, this real estate investing is not passive. But I do not agree. He's not 100% passive. We are 95% passive.
I would agree with that. Yeah, really. Because like I said, I forget about them until the rent money rolls in. And then I'm like, okay, I'll get some paperwork in a couple of days, sit down with my coffee and put my numbers in. And that's really it. It really is that simple. It's really that simple.
That's right. Yep. Anyway.
So we got a great team in Buffalo, on the Buffalo, Niagara Falls area, and they are very trustworthy. It's just, I don't worry about it. I'm not on pins and needles like, oh, is the rent going to come? I don't worry about it. Really, I forget that I have property until I get the money in.
Julie, just like my other members, same thing. They have purchased into our Florida markets, our Texas markets, our Alabama markets, and now Oklahoma. And in the future, we can have Indiana, new construction.
That's great.
And affordable housing scenario, same thing. Our philosophy will continue into the future. And other markets we're doing in sub-Texas also coming up with affordable housing, high cash flow, new construction, low cost for our investors. And in many markets, Richard Evany and myself, we are the pioneer. We are promoting this new wave of a real estate portfolio acquisition, as we discussed on this video. More to come. Is so much. This is just a tip of the iceberg. Anyway, that's all I have to say. And to recap, this is the wave of the future. This is a great investment model. You're not trading time for dollars. People help so many people over the years, and so you don't need to be a full-time investor. Just enjoy what's important, what's your priority, right? And spend time with your family, your children, grandchildren, or travel around the world. Let your team take care of all the dirty work on the ground to maintain your risk portfolio. So
Absolutely. 100%. Yeah, I couldn't agree more. I'm just thinking the investing is providing a lifestyle for you like no other. The money comes in if you're on vacation. The money comes in if you're sick. The money comes in if you got a family emergency. The money comes in and it's consistent. I think if you just set it and forget it, like that old commercial, I forget, it was some chicken rotisserie thing they had, set it and forget it. But you do the legwork up front, you prepare the chicken, you season the chicken, you throw it in the oven and you forget it. It's the same thing here. I did a lot of work in the beginning, researching the areas, researching the market that you had given me, figuring out what our niche was, figuring out what our goals were. But once I figured it out, I put the actions into place, I said it, and I forget about it. Literally, it's just that simple. It's just that seamless. It can be done. We started late in life, as you have mentioned before. So it doesn't really matter what age you are. It's better if you're younger, but it doesn't count you out if you're older. The opportunities are still there.
I absolutely agree. Thank you so much for your kind words, Julie. And with that in mind, if you receive any value from this video, please like and subscribe to my YouTube channel. And better yet, finally, put your email into our website below in the description, so you can become a free member of our network. Once you do that, every day you'll receive free newsletter video into your email inbox, so you can learn to become a true real estate mom and pop investors to achieve your financial goals. Thank you so much. This is Seewing Yi and Julie. Have a nice day.